So
Okay. Okay. Hello. Hello, everyone. Hi, good evening. Welcome, welcome, welcome to the second evening of the Bamboo Bootcamp. So we're going to give everyone, we'll give it about 5 minutes so everyone gets in, and then we'll get started. But hi, everyone. Good evening. Welcome. Is my video on? Hi, guys. Okay, yeah, so people are just joining now. So yeah, guys, we're gonna start in 3 minutes. So for us, it's 6:05 p.m. I mean, what time is it? Are we on the same time zone now? You're in mute, by the way.
Sorry, yes, the exact same time zone, 2 minutes after 6.
Okay, perfect, the same person.
Yeah.
So we're gonna give it about 2 minutes. So we can start at 6:05. And so we can hopefully be done around 7 still.
Awesome.
You know, give or take. But hi guys, welcome. We're very excited to have you all here. Hi. Oh, Emma, it looks like we have someone who was on our last talk together. So I see someone saying.
Hi, Uko, nice to see you again. Well, I nearly see you again. Nice to see you here. Thank you.
Yes. Yeah, just a few ground rules. I'll repeat them once we get started. But if anyone has questions, please put them in the Q&A box, not in the chat, because that's the best way for us to track. So we you know, it's not that likely that we'll answer questions from the chat, but from the Q&A, then we'll definitely try and get around to those. All right. So now we have 1 more minute. And interestingly, whenever we have 1 more minute to go, it always feels like the longest minute ever. So we'll see how that goes. But 1 more minute, guys, and then we'll get started. I know everyone's looking forward to it. Okay. And now we twiddle. Okay, guys. Hi, everyone. We're going to get started now. Good evening, everyone, and welcome to another Bamboo Bootcamp session. This session is going to be a little different. You know, if you've been to any other sessions, then this session is going to be a little different because it's going to be Emma literally just giving you guys a lot of wisdom today. And for those of you who do not know, Emma's the chief investor at MyWallSt, one of Bamboo's partners. So if you've seen anything in the Bamboo app, most of the stock information, anything, if you've read any of my opinions on stocks in the Bamboo app, it's probably come from the MyWallSt team, very, very excitingly. But even more exciting than that, Emmett is a master investor. And you know, he happens to have beat the S&P 500 overall multiple times. So he's going to tell us about Horizon, and Horizon is this really cool service that MyWallSt has, but I'll talk about it later in the year. But essentially, he's, you know, if you listen to him, you should be able to do 10x. You should be able to 10x your portfolio in 12 years. So that's very, very, very exciting. So I will let Emmett take it from here. Emmett, thank you so much for doing this. And we're very, very
Thank you,
excited to hear
Yanmo.
from you.
Delighted to be with you again, Yanmo, and to speak to the Bambooites. Is it the Bamboo Crew? Have you got a name for your bamboo base? Is it the Bamboo? We're going to have to come up with a nice name, but I'm delighted to be here and speaking to all
yes, we should.
So I'm going to do a screen share, everybody. Hello, and I'm really genuinely delighted to be here for several reasons. Apart from anything, Nigeria and Ireland are effectively twin countries. Now, can you see my PowerPoint? Where am I? What am I sharing? Oh, sorry, guys. Hold on a sec. Let me go. I have to do a quick screen share. Apologies, Evan. It was hidden there behind. Okay, so I'm going to use these slides to guide this chat. I just think it's always good to have a visual to back up some of the things we're talking about. So I'm going to kick off with a competition with no prize. So it's going to be the worst competition ever. I'm going to talk a little bit about the US Stock Exchange, and a lot of the things that I'm going to say to you, you will have heard before in some way or another, but hopefully I'll explain something about stock investing that is new to you. And I'm going to talk about really what I think we're all here for, which is to find winning stocks. And when I say we're all here, the only thing we all have in common on this call is the desire to better our future selves. And the way we're doing that is through stock investing. And hopefully at the end of this 1 hour session, you'll feel very, very excited about the opportunities that lay ahead of all of us as potential investors to change our wealth. Okay, so I am going to start with a competition. Now, can I see the chat box? I can't, but I want everyone to, the competition is, where was the world's first stock exchange and when did it open for business? So as you know, every country in the world has its own stock exchange, or almost every country in the world has a stock exchange. The Irish Stock Exchange, the Paris Stock Exchange, Nigerian Stock Exchange, the New York Stock Exchange. So where was the world's first stock exchange and when did it open for business? Type your answers in the chat bot over there to the left-hand side. Okay, now because I'm presentation mode, I never thought of this. I can't see the answers, but being as there's no prize, it doesn't matter really. So the first stock exchange, just for your information, was in Belgium, and it opened in 1531, and then it burnt down and they rebuilt it again in 1583. And then there was another fire, which they had to rebuild it again in 1853. And then eventually it closed in 1997, when it kind of looked like it had gone to rack and ruin, but it has actually been rebuilt again and it's being restored to its former glory. So that was the very first stock exchange in the world. So to think that this as a pursuit has been around for nearly 500 years is pretty incredible. So we're participating in a system that's been around for a very long time. Okay, second question for the quiz with no prize is, what was the world's first publicly traded company? And there's its logo. I mean, I've almost told you what it is, okay? So write in the chat box, what was the first company in the world to sell, make its shares available to the general public? Okay, well, I'm gonna guess nobody got it, but so it was the Dutch East India Company. And what's amazing about this company is it paid a dividend of 16% per year for almost 50 years. So assuming that there was no change in the price of the share, I can't actually get the share price history. By reinvesting those dividends for 48 years, your initial investment would have grown 1,241 fold, which is nice. Okay, I've just done a very deep analysis of my stock portfolio, and I have only had one stock that performed that well. So we'll get on to that later. So the US Stock Exchange is where I'm going to guess nobody on this call is American, or at least identifies as American. You might have citizenship, but broadly we are all in Nigeria and Ireland. But the US stock market system is the best mechanism for wealth creation in the world, because there's more choice, and in other words, more stocks available for you and me. And through investing with Bamboo, we can own a stake in anything from Tesla through to some other stocks I'll be talking to you about soon. Now, as we know, there's only 5 real ways to get wealthy. There's probably lots of subdivisions, but there's only really 5 ways that an individual can get wealthy. And the first is inheritance, where somebody loved you enough and was rich enough to leave you what they had. To win a large sum of money, to start a business and make it a success, to be a highly rewarded professional. So whether it's solicitor or doctor or pilot or whatever, that you have a skill that commands a great salary. And finally, investing. Now, number 1, 2, and 3 require luck, as in you cannot decide what family you're born into. You cannot decide you're going to win, buy a winning lotto ticket. And you can decide to start a business, but an element of luck will play a role in it becoming a success. But you need to be lucky for 1, 2, and 3. To be a highly rewarded professional requires you to dedicate effectively your life to a proven way of generating a big salary. So if you decide you're going to be a brain surgeon and go, to University of Nigeria or University of London to study medicine, you're dedicating your life to this, and you will be rewarded for that. But number 5, investing, you can do it on the sideline of your life. You can do it, it's a separate swim lane to your own existence, and you can continue to build your career and your family, your friends, and your hobbies while stock investing and creating generational wealth while doing so. So I'm here to talk to you about number 5. And I guess what this is, courtesy of a website Finimize, is a view of the S&P 500, which I'm pretty sure most of you will already know is an index made up of 500 companies that together are considered representative of the entire United States stock market system. And as you can see in these squares, the sectors are covered like technology, communication services, healthcare, industrials, utilities. So a little bit of everything is in there. It's one giant big collage of all the businesses, and the bigger the square, the bigger the business. And it's no surprise that Microsoft, Apple, Google, Amazon jump out. And then there's other, like V in the bottom left-hand side is Visa, and below it is MasterCard. And there at the very bottom is legendary investor Warren Buffett's company, Berkshire Hathaway. And there's lots and lots of businesses in here that we not only know, but we interact with all the time. But I took this screenshot clearly on a day where the market was performing well, but our only goal is to beat the S&P 500, which historically has returned about 10.5% per year on average. Now, some years it's down, some years it's up 20%, next year it's down 7%. But if you'd have bought shares in the S&P 500 and held them since 1953, which is when the index was formed, you would make on average 10.5% compounded every single year, which means, roughly speaking, you double your money every 7 years. So we are going to try and use the gray matter and outperform the S&P 500. Now, I'm going to just talk to you about what we all lived through last year, and it's something you're all every single person in this call has lived through what I'm going to explain. So I'm really telling everybody about such recent history. There are 7 billion stories of coronavirus in the world. We all have our own story, but this is how the S&P 500 performed in the calendar year of 2020. And as you can see, when it became apparent to America, I guess, where the stock market is based, there was a drastic and sudden sell-off of shares, and the most precipitous fall of the stock market system in history happened. It was a cliff edge, but as you can see, it very, very quickly recovered. So faith was lost in the stock market, and very quickly faith recovered in the stock market, and it shot back up beyond where I'd fallen to. And what I'd like to do is just point out something in Wikipedia, because you might not know how dramatic the coronavirus crash was. So in the second paragraph, I'm going to read it out. The crash was the fastest fall in global stock markets in financial history, and the most devastating crash since the Wall Street crash of 1929. And the crash, however, only caused a short-lived bear market, and in April, global stock markets re-entered a bull market, the crash signaling the beginning of the COVID-19 recession. So we all lived through this, but isn't it amazing to think that, you know, this, while we all had to figure our lives, our families, and our work, you know, the way it manifested on the S&P 500 was the fastest crash in the history of the world. And that's pretty amazing. But when you zoom out and look at the S&P 500 since 1974, which is the year I was born, very important year, you can see it over on the right-hand side, that little red circle, or it's not a circle, I've forgotten the word, oblong circle. That's the coronavirus crash. It doesn't look so bad because it was so short-lived. But if you look at those two black arrows, the first one was the dot-com bubble crash, which, as you can see, took multiple years for the market to recover to the high point after the dot-com bubble crash of the year 2000. And then the second, the financial crisis of 2008, another crash happened, and Lehman Brothers, the big bank in New York, went bust, and all the motor car manufacturers up in the city of Detroit were on the verge of going bust. And again, so it's amazing to think the one in red was more drastic than the two with the black arrows over them, but because it was so short-lived, it just doesn't feel as bad. So I just think that's an interesting way of looking at the S&P 500. But if we look at the S&P 500 for nearly 100 years of data, which is like pretty big data, you can see that broadly speaking, if you got a kid to draw how it's performed, it goes up. The stock market performs over the long period of time, and this is the longest period of time. And in the background, you can see little gray bars. If you're driving along and the phone is on your lap, don't look, because they're really faint, but you can see gray bars, and they indicate where there was a recession. So you can see that, like, the healthy stock market system against a backdrop of corrections and recessions still performs. And that is why there is no mechanism for wealth creation ever as reliable as the stock market. So let me prove that to you. So in order to prove it, so I mentioned the S&P 500. Actually, I said it was founded in 1953. It was 1957. The S&P index was founded. But what some clever people did, notably a guy who won the Nobel Prize for Economics called Robert Shiller, he synthesized the S&P 500 for 145 years to assess how reliable it is as an investment mechanism. And the top line, don't read, was there is no period in 145 years of data where you would have been down had you taken a 25-year mentality, or view, I should say. So 25 years, I know, is a really long time. So let's break it down a little bit more before I come back down to earth and tell you how we're going to find great companies. So the probability of being down had you invested in the S&P 500 after 10 years, the probability is 0.118 or 11.8% chance. If you widen your time frame to 15 years, the probability of being very unlucky and starting in a bad year is about 4.7%. But if you broaden it out to 20 years, and I hope everyone on this call has another 20 years of investing ahead of them and many more years of that of life, the chance of being down is negligible. It was only one incidence, or 0.06% chance of being down, and that was had you invested in the S&P 500 in the year 1901, which had very particular conditions at that time, which are not prevalent now. So the point is, the longer you go, the better it is. And there is, as a fact, no asset class with such historical certainty as the stock market in America. Once you take a long-term approach. Okay. And by the way, I'm going to show you the price of an ounce of gold, because one of the things you hear as an active investor is, well, should I buy gold? And this, oh, whoops, sorry. This is the price of an ounce of gold plotted for 100 years. And as you can see, unlike the S&P 500, and this is adjusted for inflation, so a price of an ounce of gold somewhat cycles between, let's call it $400 and $2,000. It is a hedge, but frankly, I'm not going to elaborate on it. But I think gold is not a good investment. That's all I'll say about that. But when you look at, this is how an American citizen born and raised in America, maybe 10 years older than me, would regard history. And at any one time, there were things going on in America which had the population worried. There were very real things, very horrible things that happened in American history, in everyone's history. But like there was 9/11 is the one that I remember. I was 26 and it felt like the beginning of World War III, but the stock market system responded. But businesses are designed to prosper. They're filled full of people like you and like me who are using the brain to figure out the problems and divert the business or manage a business through these problems. And that's at the S&P 500 with problems plotted on top of it. So if I can just say that, I could talk forever on why the stock market is proven the greatest wealth creation mechanism and the one thing we should all do. And I'm going to just hope I've brought you on side on that. And then the question is, so how do I find winning stocks? Okay, I'm grand. I've got my Bamboo account and I'm good. I've put money in. What stocks should I buy? So there are 6 golden rules to investing successfully. We call them MyWallSt 6 golden rules. They were assembled through a lifetime of reading and practice by me and my colleagues. But initially, when I co-founded the business, I sat down to design rules that make this pursuit fail safe. And number 1 rule is get started, which speaks for itself. You can't be successful at something unless you start to do that thing. So I'm going to presume you've opened your Bamboo account and you're either on the road or you're about to start. Number 2, as hopefully I've just demonstrated, you've got to think long term. This is not a get rich quick scheme. It is a get rich slow method. So the longer you can think, the better. Rule number 3 is never borrow money to buy shares, because as we all know, money comes with interest and we don't want to have to pay that money back at a later date. And no matter how sure you are that an investment is good, you're never certain. And you don't want to have borrowings to buy a company. Never do it. Don't do it. And I could give you an hour lecture on why you shouldn't. And it's basically because I lost my shirt, as we say in this part of the world, in the year 2000 by borrowing to buy, and it bankrupted me. But thankfully, I learned from it and got through it and have recovered since. Number 6 is diversify. You must diversify your portfolio because you will invest in winners, but you will also invest in losers, and your winners will compensate you for your losers. And I have just completed a study, which of every stock investment I have ever made, the study just completed today, and the number of stocks that I've bought that have gone up over 3,000% is 16. I have bought 16 companies that have increased in value by over 3,000%. And the number of stocks I've bought that are down ever since I bought them is 47, which is 47 stocks. But I can assure you that you only need one outstanding investment to change your life. And the very first shares my biggest winner is Netflix, which is up, the first purchase is up 31,000%. And it only takes one winner to compensate you for your losers. But by diversifying, it's only through diversification will you make sure you've nullified your losers with outstanding winners. Buy what you believe in. the fifth rule. I'm just going to speed up a bit. Buy what you believe in, simply because you should not own something you don't believe in, and only invest what you can when you can. Now, it is 26 minutes past 6 p.m. and we're all on the same time zone. So what I want to do is I'm just going to give this 2 minutes, which is the method by which I have found so many winning stocks in my life. And historically, stock investing wrongly was more a male pursuit. It was like 50 years ago, it was more male than female. Should never have been the case, but that's the way it was. And what we have is when something becomes principally, especially investing, a male pursuit, it becomes very left-brained activity. It's all about the numbers. And that's easy because numbers you can just get quickly. So imagine you went to buy a car. You can assess it with numbers. What price is it is a number. How big is it is a number. How many people can it hold? What's the size of its engine if it's running on gasoline, petrol, diesel, whatever. These are all number-based, but nobody buys a car based purely on the size of the engine or the price. They like the look of it, they like the color of it, they like the brand of it, and these are right-brained activities. And when you go to assess a company for investment, the biggest mistake you can make is only thinking about the left brain. So there's 10 criteria that I assess every company through, and I'm going to tell you them really quickly. High insider ownership. That means the founders and exec team own between 5 and 40% of the shares. The market cap, how big is the company? I prefer to find businesses between 2 and 20 billion in size, more cash than debt, because a country and a person and a business with more cash than debt can't go bankrupt. Great return on equity, which is Warren Buffett of Berkshire Hathaway's favorite number, 20% or more is great, and sales growing year on year. But on the other side of the brain, I like to see a lovely company culture, sustainable competitive advantage, evangelist customers, a growing industry, and visionary leaders like Yanmo. So here is just something I'm just going to tell you about. If you're going to make investment mistakes, make sure you're biased towards optimism, not pessimism. Long-term thinking has been rewarded in the past, and unless you think that the world or innovation is coming to an end, it should be rewarded in the future. Losses are part of the deal when you're investing in stocks. How you react to those losses is one of the biggest determinants of your investment performance. And that is a direct lift from a blog called The Wealth of Common Sense, which I've linked at the bottom there, and is a great one I think you should look at. Now, here's something really interesting. If you look back at a 20-year period from the 1st of January 1999 to the last day of December 2018, if you missed the top 10 days, I mean, just days, 10 days out of 10 years, out of 20 years, your overall return would be cut in half. So that means only 0.13% of the time within a 20-year period was responsible for half of the gains. So that means being invested and sticking with it through thick and thin. Nobody can time these up days. They just can't. It doesn't exist. There's no way of knowing it because it's based on very often on human sentiment. And that is not something you put on a weighing scales. Now, what I'm going to do maybe is just do a quick demonstration, I guess, of what I look at when I go looking at a share. And I'll just do it for a couple of moments. What I'm going to do is open my browser. Let me see. And I'm going to open Yahoo Finance. Sorry about this, guys. I should have had this done. It's been one of those days. So I'm going to open Yahoo Finance, which, as most of you know, is to stock investing what I suppose Google is to search. And I'm going to open that, share my screen. Okay, so can you see my Yahoo Finance screen? Hold on, I better go up to the Q&A and see.
Yes, we can.
Okay, great. Okay, so this is Yahoo Finance. And what I'm going to do is go through really quickly, go through an analysis of a company. And in fact, what I will do is ask somebody to nominate a company. Let me see under Q&A, somebody nominate a company for me to look at, and we'll do that really quickly. I'll show you what I look at. So I'm in the Q&A board now. Someone just dropped the name of a US listed company and we'll have a look. Sorry, I'll scroll to the bottom. Okay, Amazon, Apple, Square, AMC. Okay, I'm not going to do AMC because there's other things at play there, but let's go with Square. Not because, okay, I'm going to go back to full screen. Okay, I'll close that. So we're going to go with Square because it's just slightly less known than Amazon and Apple, and a wonderful business. So the first thing you do, if you don't know the ticker, which is SQ, but if you don't, you just type in Square, SQUA or E, and then you see, oh, there's Square up there. Interesting, never heard of this company, you might say. So the first thing you will look at when you open Yahoo Finance is, the first thing I look at is the market cap. So I see that Square is a $100 billion business. So it's big, but it's not ginormous big. Like if we take like the Amazon is worth over $2 trillion. So we know that there are businesses out there 20 times bigger than Square, but equally we know that it's in the same ballpark as a lot of other giant brands. The second thing I noticed, by the way, is that there is a PE, a price to earning ratio. Any number implies that the business is profitable. Now, we won't dive into the nuances of the size of the number, but if you see a number, you go, oh, so this is a $100 billion business that's profitable. And then what I'll usually do is just kind of look at the 5-year graph just to understand, is there past price appreciation? A bit of a tongue twister. Does it have strong past price appreciation? And it does. I can see that, you know, a few years ago, Square was only $11 a share, and now it's $221 a share, as we can see up here. So I'm suddenly getting a feeling for this business that hypothetically I've never heard of. Now, the second tab I look at is statistics, which is the third tab over. So if we click on statistics, the first line is market cap, we saw was $1 billion. The second is the enterprise value. Now, what I like to see is an enterprise value that's less than the market cap. Now, I actually know Square, and I think we all know Square, so I'm not especially worried about it here. But when a company's enterprise value is less than its market cap, it has more cash than debt. Okay, and that can be verified. If you scroll down here, we can see that Square has $4 billion in cash, and we can see that it has $4.2 billion in debt. So it has more debt than cash, but we don't mind because it's an awesome company. We're going to forgive that. It has an outstanding return on equity, 17.3%, according to Yahoo Finance. It was really good. And then percentage held by insiders is 1.2%. So the numbers that I look at, what I'm building up in my mind is a sequence of traffic lights. I kind of go, oh yeah, it's profitable, it's big, it has a great return on equity, it has decent insider ownership. I'd rather if it was above 5%, but when you have a $100 billion business, 1% is still a lot of money assigned, or a lot of shares, I should say, assigned to the insiders, to people running the company. Then the third tab I go to is the profile, and the profile allows me to actually see what does Square do. And I kind of see, right, so Square, together with its subsidiaries, creates tools, enables sellers to accept credit card payments, etc. I'd read up on it. I'd see it's in San Francisco, and I'd find out that Jack Dorsey, who some of you will know, most of us will know, is the CEO. And look, he only pays himself $3. What a modest person. And then the last thing I do is I go to their website, squareup.com. Now, although I've just rattled through that, with practice, you will do this in like seconds. You will get a very fast first assessment of any company by looking at its market cap, its share price, its historical share price. Is it profitable? Insider ownership, more enterprise value, less than market cap. So these are numbers. And really the most important thing is when you go to that website, Square Up, what you in fact really need to do is start to dive in and look at, does this business look like something that will be future relevant? And generally at the bottom of all websites, you'll find an area for investors, an investor website. And it's probably in front of me, but that is, and then you dive into the investor's website and you start to look at trends. So it's a very fast first assessment. If you ever want to find out about a business, Yahoo Finance is the place to go. And for businesses less known than Square, it becomes really useful. Okay, so I'd like to just talk to you tiny bit about my track history, and I'll tell you a bit about me, because so I started studying in college in 1992, and about halfway through college I started a blog on stock investing, and I wasn't studying business, I was doing science, studying physics in Dublin City University, but my true love has always been stock investing. And one thing that completely captivated my attention, and like it hijacked my attention when I was towards the end of the 90s, was the realization that Dell, the company Dell, which makes home computers, had grown 1,600 fold during the 1990s. So you put $1,000 in on the first day of 1990 and hold till the last day of 1999, and that turns into $1.6 million. And I wanted to find the next Dell. It became like an obsession of mine. And I've pretty much been, that has been my life's pursuit. So I have done okay at it, actually. So what's happened, what I'm showing you here is a letter that simply says, and it's, what's that word, redacted, it's taken out dollar amounts, but you can see in the very bottom line that my 10-year return, compounded annual return ending in July 2019, which is just when I had the letter done, was 30%. That was my, what's known as my CAGR, my compounded annual growth rate. But in the longer period, from where does it begin? Yeah, from 1st of October 2001, which is nearly 20-year period, my CAGR was 20.85%. So I've managed to be fortunate enough to be born in a time where the internet is here, where mobile apps like Bamboo have opened up the world of US stock investing, and I've applied myself to those golden rules. I've applied myself to that assessment of left and right brain activity, and I've managed to find some great stocks. And this is a photograph of my brokerage account, a screenshot of my TD Ameritrade app, and some of my winners. As of, I did these slides on like Thursday of last week, maybe Friday. So as of Friday, my Netflix was up 19.1,000%. And I purchased it on average purchase price of $2.60, which is great. Tesla, I invested in Tesla 10 years ago. Chipotle Mexican Grill, I'm up 2,242%. Shopify, I'm up 1,730%. Disney, Facebook, Zillow, Paycom. In fact, everything from Zillow upwards, I'm up over 12-fold or more. So I love this, and that's fine. That's history. That's like Netflix is not going to grow another 20,000%. But there are businesses out there today that will. And what we need to do is look at the attributes that Dell had long before I was a stock investor on the first day of 1990. What were the attributes Netflix had the day I bought? I sold my car to buy shares in Netflix. And it was like, I looked at Netflix and it was like bing, 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 green light after green light went to my head. And this was in the year 2003. And I said, and I had no money. I was actually broke. So I sold my car to buy Netflix. And thankfully, I still have those shares. Tesla, yeah, bought those at least, well, let me think, it was at least 10 years ago. I think it was 13 years ago I bought Tesla shares. I can't remember. Chipotle, the same. So what we need to do as investors is find the next Netflix, Tesla, Chipotle, Shopify, and that is what I do in the service that Yamo is going to talk to you about, called Horizon. Now, let's remember 3 rules that's universal to everyone on this planet. Nobody cares more about your financial future than you. MyWallSt's mission is to get, actually this is, this isn't about you. The first one is about you. Nobody cares more about your financial future than you. Our mission, MyWallSt's mission, is to get everybody successfully investing, get the world investing successfully. And the purpose of MyWallSt, the reason I co-founded this, was to inspire everyone, inspire you, the listener, you to own your financial future, just to own it. So I have a service called Horizon. MyWallSt runs a service called Horizon. And basically, whoops, sorry. So, and it is for the every person. It is for somebody who wants to see, what am I investing my money in? I'm about to make a stock investment later this week, which I believe is going to be one of the greatest investments of this generation. And I will continue to do that. Every single month, I'm taking a lot of my own family's money and I'm investing it entirely for the world to see, because I am fortunate enough to have a good track history, which has not only been reviewed and audited, but has actually, changed my life. And I really love what I'm doing. And I am out to just keep doing it for as long as I've breath. I'm 46. I hope to do it for another 25 or 30 years, and then I might retire. So this is an every person service. And there has never been a better time to be an investor. Like the golden age of investment, there's always something beautiful coming at us to invest. And the internet gave us great opportunity over the last 20 years to find Apple, Amazon, Netflix, Google, Tesla, you name it. But there is a new wave of wonderful companies out there staring at us. I'm looking at them. I've bought shares in them in Horizon recently. And what we have is some really deep, we care for our customers. Like MyWallSt primarily is a customer experience company. We want to make sure that anything that we deliver to anyone in this world delights them. So as Yanmo very politely and kindly pointed out, like the comments inside the Bamboo app on stocks were written with love by me and my team and my colleague Rory and his team. So we keep a really close eye, and we have we have some great customers. And one quote from a gentleman in Cyprus called Jayan said he only wished the service existed 10 years ago. We have another Evgenios in Greece said that without Horizon, he would be stressed, somewhat lost, a victim of everyday news and personal biases, and less wealthy. And we have Karina in Australia who said, I'm feeling much more knowledgeable and confident with regards to investing. It feels great knowing Emmett is putting his own cash into this and that the Horizon community is all in it together. And on that subject of community, one of the things I really value is the community aspect of Horizon, because we have a really great discourse in our conversations and our community boards, and we talk about great investments. And everything I do in Horizon, everything I do in my private financial life goes into Horizon. And let me just tell you, there's 3 elements. Number 1, I record pitch videos where in about 3 minutes, I explain a stock that I really like and why I like it. Number 2, I do trade alerts, which is buy or sell. And number 3, I give a weekly update on the stocks that have news called Eyes on Horizon. So that is the end of my slides. I said I'd speak for 40 minutes. I overshot by 4 minutes, and I'm really honestly delighted to have had the opportunity and privilege to speak to you. And Yanmo, I'm going to hand back to you.
Hi, Emmett. Thank you. That was fantastic. And that was actually a really good talk. I actually learned some things. Hope you guys also enjoyed the session. Hope you guys learned a couple of things. Hope you guys learned about investing and trading. If you enjoyed the session, you liked listening to Emmett speak, you like hearing from the MyWallSt team, Bamboo has teamed up with the MyWallSt team to get Horizon to our customers at Bamboo, so that you can be a part of Horizon. The team at MyWallSt has given us a very, very great price for the service, which we're really, really grateful for. So we will definitely send. Do we have so that is going to launch first tomorrow morning. So if you are a Bamboo user, and make sure you check your email first thing in the morning, and you'll get an email telling you how you can sign up and purchase a Horizon subscription. And thank you, Emmett, for graciously giving us a discounts, guys. So Horizon is very, very expensive. So when I had to buy Horizon to test it, oh wow, it's been a year now, actually. Oh wow. Yeah, it's been a year since I got my Horizon subscription. And it's actually really fantastic. So my favorite thing about Horizon, interestingly, is Emmett sends you an email when he's thinking about buying something. And then he'll also send you another email when he's actually going to buy it, which is fantastic. So I'm probably not a great user because I'm not great at listening to the pitches. But as soon as I get the email that says I'm buying X dollars and how much you're putting it, then I just open my app and press buy. So, but if you buy it, listen to the pitches, learn how to become a much better investor, because it's actually a fantastic, fantastic resource and will get you guys more information. And yes, the recession has been recorded and you'll have access to the session after. So Emmett, we have about 15 minutes. So we want to just, people had a couple of questions. So we'll try and get through them as quickly as possible. I have them right next to me. So one is a question I think the first question is one I think all of us have who are long-term investors, which is I'm new to investing in stocks and I want to hold for the long term, let's say 5 to 10 years, which is a good period, but do I have to sell at some point?
So it's funny. The natural answer is yes. Someday you will have to sell, but I've taken a very big a big study on all the investment decisions I've ever made since 1999. And whenever you sell a stock, it's generally for one of three reasons. You sell it, apart from needing the money, but let's just say there's only three reasons you sell a stock. You've lost belief in a company, because either somebody has convinced you, you've somehow become convinced you were wrong, you are tired looking at it being priced less than what you paid for, or you need the money to buy another share. So there's a kind of the psychology of selling is quite deceptive, because the number one strategy, insofar as one can do it, is never sell. If you are buying a company, try and say, like, it's almost like a marriage. You go into it as if this is forever. That's the spirit you go into it. Now, you could decide, look, I'm going to sell my entire portfolio when I hit 55 or when I hit $1 million or whatever. And that's fine. That's a predetermined, but I will always explain stocks I'm selling in Horizon and why. But all the investing masters struggle to come to an agreed definition of when you should sell. Lots of great investors can tell you when you should buy, but the selling thing is mixed so many different things, personal factors and age and liquidity. And so it's it's the hardest question to answer, Yanmo, because every single academic book disagrees, whereas lots of academic books will agree on when you should buy. So my advice to someone is try and hold for as long as, try and pretend it's for the rest of your life.
Okay, but then someone also asked on the same topic of selling, do I have to sell some stock to buy others across the line? So do you think, if you're selling to buy something else?
Oh, in Horizon?
I mean, I'll join you, for like as an investment thesis, like are we ever, even in Horizon, are we ever selling to buy something new, or is it?
No, the best way to do it is to add a little cash often and buy new positions. So no way, if you get into a habit where you sell stocks to buy something else, what you're actually doing is very possibly selling the one stock that's going to change your life. And like, I have a great example of my cousin bought shares in Amazon in the mid 90s, and 10 years later sold for 60% loss. And she sold and took about $20,000, which if she kept would be worth several $1 million. And I know I'm cherry picking an example, but the one you're selling could turn out to be the greatest decision you ever made when you bought it, and you have to just leave it. Like really good, interesting point is that like Microsoft was flat or negative for 16 years after it floated, until it became the giant that we know today, and turned out to be the greatest investment, one of the top 5 greatest investments ever known. 16 years of nothing. So you have to have patience. So to your asker's question, I think you shouldn't, you don't have to sell to buy. What you simply do is you try and add new money. Now, if you don't have new money, you do have to sell the one you least prefer, but it's on the whole going to erode your returns.
Okay, guys. I'm just sorry, I'm just reading some of the comments of people telling us they regret selling. So that's one thing. Jenny, someone wants to know, how do I buy the S&P 500 that you
Yeah,
spoke about?
yeah, sure. So the S&P 500 is also known as the spiders. And you can buy the S&P, an ETF, an exchange traded fund. I'm quite sure through Bamboo. A lot of different countries have imposed different laws on ETFs. So I don't want to say, Yanmo, can you buy the ETF? Can you buy the S&P 500 with Bamboo?
Yes, you actually can. So
Yes. Yeah.
I buy VU, but you can buy.
Yeah.
So that's the Vanguard one, and the ticker symbol is BOO. But I mean, people prefer different ones. I don't know.
Yes, exactly. So it's yeah, exactly. So you can buy the S&P 500 through the through Bamboo.
Okay, fantastic. How do you feel about Chewy Inc?
So there's two Chewies. There's one which is a restaurant chain, and there's another
Ooh.
which is, I think it's pet is it pet care? I don't have a strong opinion on Chewy. Understand, I know the restaurant chain Chewy, but I don't
Yeah,
know Chewy, the pet company, well at all.
yeah. Okay, so let's pause that one because I'm not sure either because I don't
Yeah,
have a ticker symbol here.
I've jumped
Yeah.
straight into Yahoo
If
Finance, but anyway, yeah, I just
yeah,
don't have
it's
an opinion
fine.
on it. I'm sorry.
Yeah, because I mean we have a lot of questions to get through. Yeah, it was the pet stock, so that is true. You don't have
Yeah.
an opinion on that. Yeah. So the next one is, as a new investor with limited cash to invest, is it preferable to invest in lower price shares? Bamboo has fractional investing, by the way, so you
Sure.
can just take that into account when
Well,
doing
fractional
that.
investing is great because you don't need to worry about what the share price is, because the share price doesn't tell you anything. The market cap, the number I showed you earlier about the size of the business, that's far, far more informative. The share price is not informative. So in fact, it goes against logic and might feel better buying shares that are $3 for 1 unit, $3 versus a single share on Amazon, which is thousands of dollars. But that's actually false logic. It actually is deceptive. Even though you might feel better that you bought 1,000 shares in something, use fractional investing. Just decide you're happy to invest $50 or $20 lots. Do not get deceived by the share price. It contains no information. In fact, if you're talking about share price that's only dollars or cents, it's actually a negative signal. Even though you might feel good buying it, it generally does not work out.
Okay, fantastic. Someone wants to know, oh, this is an interesting one. Do you think Amazon is going to beat Netflix in coming years, especially with Amazon Prime, and even more so now with the MGM acquisition?
Yeah, well, to be honest,
I think Netflix was the highest performing stock, right? Yeah,
it
of
was,
the last
yeah,
of the decade when we were getting.
So if I had to choose one, I would choose Amazon, because nobody should bet against Amazon. They have everything. And that doesn't mean that I think Netflix is going to be ruined by Amazon. I don't. We now live in a world where we subscribe to different services for different content, and they sit beside each other. But yeah, it remains to be seen. But I think Amazon just seems to get stronger and stronger.
Okay, someone wants to know, what is the difference between ETFs and index funds? Ooh.
So an ETF stands for an exchange traded fund, and it is effectively an index fund. There's another type called a mutual fund. So mutual funds and ETFs are two ways of investing in themes. So with an ETF, the S&P 500 is an index fund. It is a fund used to index your own performance against Whereas an ETF will generally have a theme. So you might have cybersecurity ETF or clean eating, or you might have the gig economy ETF. An ETF allows you to buy a basket of shares in a theme, whereas an index fund is generally representative of the entire market, like the S&P 500 or the Dow Jones, or there's so many different indices, but they're the ones that you'll usually hear about on the news.
Okay. I hope everyone gets that, because that actually used to confuse me for a while. Someone said, is Horizon self-directed? So yeah, how would you tell people to use Horizon? All of us go get it tomorrow morning.
So really what Horizon does is it simply tells you what I'm buying and why. And what, there are a lot of members who will ignore they'll go, that guy is crazy, because you got to buy what you believe in. And there's other ones that people go, I really like that idea. I never would have found it. I think it's wonderful. I'm buying it. So it is purely self-directed. And that's the nice thing. Everyone should be free to just use their own intelligence, because everyone knows more. It has an angle that I don't have every angle. I just know what I know. But I know with the stocks I'm buying in Horizon, some will prove to be outstanding winners and some will not. And you know what? Our members generally just use it as you described, Yanmo. They'll jump in when something catches their eye.
Okay. And how should your portfolio be mixed for a long-term investor? So like between stocks and ETFs, that sort of thing.
So there's no wrong answer to this. Really, stock investing allows you to go out a risk curve, and the lowest risk way of stock investing is by buying the S&P 500 and forgetting about it. Just buying the S&P 500. Whenever you have money, buy the S&P 500, because what you've effectively done is bought a little bit of 500 companies, and that's the lowest risk. And it's a very nice way to invest. It takes the thinking out of it, takes the pressure out of it. What I'm out to do is absolutely beat the S&P 500, and that needs to be done by being diversified across a lot of businesses with higher risk profile. So for people who have a very low appetite for risk, they should be buying heavy into ETFs and only buying a few individual shares. Whereas those with a higher appetite for risk, which generally would align with age, like if you're young in your 20s or your 30s, I think you can afford to take measured bets, kind of higher risk investments. And so I would say most people should have probably a bedrock of maybe 10% of their folio in ETFs, depending if they're high risk, and if they're low risk, up as much as 50 or 60% in ETFs.
Okay, that's interesting. And then you brought up diversification. So if I want to do individual stocks, how many stocks do you think you should own to have a well diversified, but not over?
The bare minimum is 12. You should not have any more than 12 stocks. I'm sorry, any less than 12 stocks in your portfolio. I usually have a target number of 20 to 30.
Okay, that's interesting. Okay, so we only have 1 more minute, and I just wanted to check. Emma, so for those of us that buy tomorrow, what do we do once we get Horizon? What do we do next? Do we just, because there's already going to be a portfolio there. So what do we do?
So the first thing is there's videos when you arrive called Get Started. And the Get Started videos explain the philosophy and how to build a portfolio with Horizon. And then don't feel compelled to play catch up, because every month what I'm doing in Horizon now is I am depositing $4,000 to my brokerage account, and I'm buying the only share that I think will most outperform in the next 10 years. So all you need to do is follow along when you're ready. Now, what I would actually recommend is you go in and watch all 20 pitch videos. They're about 3 minutes each, so that will take a while, but just do it over. Take your time. Like, this is a marathon. It's not a sprint. So arrive, absorb the Get Started videos, absorb my video pitches, explore the site, and then just wait, because as I said, every month I transfer $4,000 and I explain the one I'm buying now, but I'm also going to give a short list. What I also do is I give a short list of the others I considered. So someone might decide, right? The next buy alert, Emmett said he's buying CRISPR Therapeutics, but he also considered A, B, and C. And I'm going to buy all 4 of them. So because it's self-directed, I'm always going to make sure my best ideas are always available. And at the very, very oldest piece of information for a buy alert is, 3.5 weeks old.
Fantastic. Thank you so much. Thank you. That is all the time we have today. Thank you, everyone, for joining. Hope you learned something. It was a really, really informative session. This is going to be recorded, so you'll have a replay of this to listen to Emmett's wisdom, and you'll get your email first thing in the morning, letting you know how to sign up to Horizon, and early thank you to the MyWallSt team for the for partner pricing. And guys, just reminding you of that you're able to win this week with Bamboo. So for the Bamboo Bootcamp, and to celebrate till the end of the week, if you trade till the end of the week, you stand a chance to win up to 1 million naira. So someone is going to win $2,000, someone else is going to win $500, and someone else is going to win $1,500. I don't know why I said that in that order. So 2,000, 1,500, and 500. So get trading. The more you trade, the more you're better your chances of winning. And so get Horizon tomorrow so you can follow some of Emmett's advice and trade some winners. And thank you. Thanks to my Wall Street team. Have a great evening, everyone.
Bye, everyone.
Bye.
Thank you, Evan. Bye, Anmo. Thank you. Bye.